Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong monthly structure level. This is a historical structure level for this market, which was already acting as support back here. And we can see that every single time that the market tested this zone, it rejected it to the upside. We can also see how here we had a reaction to the zone with the creation of this green candle. Then we had a break below, break back above. We had a retest here, once again respected as support. And at the moment, the market is testing this same zone from which there is a possibility of seeing bullish price action being developed away from the area, as already happened in the past every time that the market tested the level. Going down on the weekly time frame, what do we have? Well, from a weekly perspective, we can notice how in going and testing this weekly and also monthly support level, as we have just seen, the market is also creating a bullish pattern. In fact, it is currently printing this weekly M pattern. Now, in general, after the creation of an M pattern, what you would expect is a potential rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turned resistance. So here on the weekly, we could expect a potential rejection to the upside for the completion of this weekly M pattern at the neckline. Going down on the daily time frame, what do we see? Well, from a daily perspective, first of all, I did speak about EURUSD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect a rejection to the upside. Again, after this impulse and correction from here, I explained all the reasons for which we could expect the creation of a potential daily higher high, and that is what the market gave us. Then we had the creation of this M pattern, explained all the reasons for which we could expect the completion. Then we had the impulse to the downside, explained why we could have the correction and continuation lower. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. But at the moment, from a daily perspective, what do we have and where we could be looking for the next potential move? Now, the first thing to keep in mind is that on the weekly time frame, since we have this impulse and we expect a rejection to the upside, the first potential upside target, if you have an impulse and you expect a correction, is the 0.32 Fibonacci taken on the impulse leg. Now, in this case, the impulse leg is this one here, so we have to take our Fibonacci from the high to the low, and this gives us a first potential upside target at this 0.32 Fibonacci. Going back down on the daily time frame, what we can see is that this would be the first potential upside target, and the second upside target would be the weekly M pattern. So there is definitely the possibility for some bullish price action to being developed here. However, the problem is that the structure is still all bearish. We have a market which is still creating lower lows and lower highs. Until this market will continue creating lower lows and lower highs, we cannot expect a rejection higher. What we need is a break of structure to the upside. Only at that point the market could continue higher. And in this case, the structure here on the daily is exactly here with this previous daily support that is now turned resistance. If the market will break above the zone, this previous resistance would once again become support. And if we do get the break on the retest of this previous resistance turn support, this is where we would have good probabilities to see more bullish price action away from this area. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the euro, what we can see is that with the last reports, net positions have been increased. In the long term, we went from having the very low 48k net positions all the way up to currently having 168k net positions. So clearly in the long term, institutions have been moving to the bullish side of the euro. So there is definitely the possibility to see more bullish price action and more institutional buying inside of this zone if the market would provide this impulse and correction. It is also important to keep in mind that if we're checking the data for the euro, we are actually already checking Euro USD because all currencies on the spot are traded against the USD. So if you're checking the data for the euro, you're actually already checking Euro USD. So if we will have the break on the retest, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move to the upside for the market to potentially complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program directly from your student dashboard, you open a trading account with them and essentially move your trading there, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in description. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.